Joining me now for a closer look at what's playing itself out in the market scene is Rand Swiss's Jaco Eager. Jaco, always a pleasure and a good afternoon to you.
Hi, good to be here.
Yes, can hear you perfectly. Thank you so much for being with us today. Jaco, red screens all around. Didn't quite expect this considering the week that we've had. It's not only here in South Africa, but also in Europe. Keen to understand what might have transpired today.
That's a big question. I think we have to understand what happened the last week, 2 weeks. I mean, if you spoke about the Eurozone had basically 9 positive days in a row. So yes, we saw some data coming out on the inflation front. So they're slightly negative, I would say. But if you look at it in the bigger scheme of things, 9 days of call it good returns and positive sentiment, you would expect a bit of a pullback. So kind of keep that in mind if you want. But the other things that obviously happened is we saw, and I'm not sure if you've already spoken about it yesterday, but we saw the housing, sorry, not the housing, the labor data coming out of the US, and we can see the labor market is slightly tighter than we thought. So we had all these economic indicators coming through in the last, call it 2-3 weeks, that gave the market this fuel, this fire that we've seen, and we were expecting, at least 2 rate cuts in the US, and that obviously filters through to the euro zone, etc. But we they put a bit of water on that fire yesterday in terms of the labor market data that came out, and it seems a little bit tighter. So I think there's also a little bit of a contagion effect from that, to say, worldwide markets, including Europe, have then, kind of taken one step back to just kind of digest and see where we're going. That being said, the inflation data coming out, the central bank of Europe, the ECB, the European Central Bank, is usually largely focused, or lately at least, in terms of inflation, focused on salaries and kind of company profits as the key inflation drivers. So we'll definitely keep a look on that. So a couple of things that I think causes some red on our screens today. But yeah, that's.
Also talk about China, what we're seeing there. Lots of data, coming out of China today as well. Actually, earlier I read a quote saying China is solved, get involved. Speaking of markets being more optimistic towards that market. Keen to get your thoughts here, and also on, the decision for the Chinese government to buy unsold homes. They're getting involved in the property market. They're easing supply and demand issues.
Look, that's been one of the weights that it had to carry lately. Is it's now been years of a really, really weak housing market, and that kind of is, I think it's a 20 or a 25% component of the GDP. So it causes a massive drag on what we see, and then obviously experience from our side when we look into China, as you see, GDP not doing that well, although it hasn't been particularly bad, if I may add. But then you look at something internal like the housing sector, and then the negativity does tend to creep in. So from that perspective, I think it's a great move. I think the market has been sitting on their hands waiting for them to get more and more involved. But I mean, this story, I mean, even my chats with you over the last couple of months to a year, when we have spoken about China, we've said this, it's like the sleeping giant, and we see the eyes opening and everybody gets excited, and then kind of closes the eyes again, and another data point comes out that's a little bit negative. And what big data points were these ones, and now that they're going to focus on it, buying up some apartments, they've issued the first batch of those 30-year stimulus bonds. So things are happening. The pace is obviously always the question. How, is it too late? Is it too slow? That we'll see unfolding. But I mean, from the export-driven, from the outside, the export-driven manufacturing sector side, continues to power that economy. Um, but all in all, I think a good thing and needed. Although I would probably argue that it's not going to fix it, but there would be other steps needed from the authorities as well, coming in the next couple of months. So this in isolation is not the magic pill, but it's definitely a step in the right direction.
Let's get into some company news now, Jaco. Maybe starting off with Naspers process. Both share prices in the red today. They've appointed a new CEO, and I hope I say this while properly. It's Fabricio Bliosi. It's very interesting, and the reason why it is interesting is because Erwin too was chief investment officer. He's been acting as CEO there. It might have seemed like a natural progression to appoint him, but they have appointed an outsider, and it looks like markets might not be taking this as well as they had hoped.
Look, I went and looked at what, and I'm also not going to pretend to be able to pronounce the name, but I've looked at the history, and obviously started in Brazil. The iFood business process got involved about 10 years ago. He has, as an entrepreneur, grown that business aggressively. It's a massive player now. So very much an entrepreneurial mindset, which you could argue is probably something that a Naspers process needs at the helm. Somebody with a bit of a, not that the others weren't entrepreneurial, but can I maybe call it aggressively entrepreneurial mindset. And that's the guy at the helm now. You've had one food business, granted it's a massive food business, but that you were the CEO of, and your job was to aggressively grow. So I think the market is at the moment just kind of digesting whether he can, because the Naspers process ship is a massive one. Can he steer that ship correctly? He's kind of had a smaller boat, which he's done brilliantly with, and the question is now let's see him at the helm, and can he now steer this ship as successfully as he's done as a call it a smaller entrepreneur up to now. The question needs to be answered, and we'll obviously see it in future reporting periods. But I think that's the big question, is just the new CEO and the track record he brings. Is it the right guy to take such a massive ship forward?
I was also ask you about Richmont there. I think the share price more than 5% up today. Market's very impressed with the set of numbers they've released there. I think even breaking some records. But I must ask you what we know is that China's consumer demand has been rather mute. And with Richmont doing so well, Jaco, very curious to find out, where did this demand come from?
Wow, I think to say they've been doing very well, I think is probably a bit too kind. They did a decent job. I think you read it earlier, when you said, Johan Rupert said, a solid performance, and then he listed, basically everything wrong in the world after that. So he's trying to say it wasn't the greatest, but from a constant currency, which means if we look at, remember, they're all over the world. So if we look at one currency going back, sales have slowed down from about 8% in the previous quarter to 2%. So yes, it's still a positive increase, but it is pulling back. So definitely not a bad set of numbers, and we also then have to look at the peer group. So LVMH also reported, was it last week or earlier the week? I can't remember. But LVMH came out with a very similar looking set of numbers to a large extent. If you go back a year, we are down about 10% on Richmont. LVMH is also about 10-11% down on a 1 year view. But then something else like Kering, which is Gucci, which I think most ladies would know. Kering is about 37% down. They also have now the new CEO. So the current CEO is stepping down into a COO role, which I think is positive from a company point of view to say, look, he's not just, dropping the baton and running a new race. He's still part of this thinking. However, the CEO of Van Cleef and Arpels, who's now going to start actually fairly soon, the 1st of June. It's
Yeah.
surprising that it's soon. He's going to bring also a new focus, more jewelry type focus to the stable, and I think that's needed, and then the market likes it currently.
Wonderful, Jaco. Keen to get your stock pick in a bit, but first I'd like us to reflect on counters that have found favor with your industry peers.
Interestingly picked Amplats as my stock pick. The share price has been negatively impacted by the news that Anglo American and Billiton will unbundle Amplats. But the interesting thing is that because the company is 70% owned by Anglo American, it's significantly down-weighted in the indices because they're free float adjusted. So to the extent that the free float becomes 100%, the weighting will increase. And at present moment, the weighting of Amplats is 0.7%, but in a full unbundling in the SWIX, that will go to 4%. And into the MSCI South Africa index, that weighting will go to 6%. Amplats will essentially have the same weighting as Standard Bank. It'll be one of the top 5 weightings in our market.
It's the China Internet ETF, KWEB. Does come with a health warning. It is volatile, but I think, to our earlier discussion around Tencent, I think you're starting to see a lot of these Chinese tech shares be rediscovered, creating, earning the right for investors to look at them again from being uninvestable a while back. I think they are starting to really show some good earnings growth. We've got JD, Alibaba, Tencent all in there. Oh. You're getting in one thing. We have seen a shift in government policy to try be more investor friendly, to try stimulate that economy and prop up the property sector. So we think the tech sector potentially moves first there. We've started to see that move. It's up 20% odd in the last month. And we think that could lead the charge higher from China.
I'm going offshore today, even though I like the SA Inc. story, like you mentioned, valuations are looking cheap, but maybe gone a little bit too quickly in the last couple of weeks. But the one that I do like offshore at the moment is Fortinet. Share sold off quite aggressively on a billing number that came out, the quarterly billing number. Can be volatile from time to time, but this is a market-leading business, good growth going forward, and I think actually quite a nice opportunity now to buy for the long term. So Fortinet offshore.
All right, Jaco, keen to maybe get your thoughts on one or two of those. In the interest of time, we have Amplats, Crane Shares, CSI China Internet ETF, and Fortinet.
Okay, let's take the first two, and I'll try and be fairly short on it. So Amplats, there's a lot to unpack there. We're talking about the reweighting, which I think is a valid comment. It's going to be a bit of a timing issue to say, if this thing unbundles, when and how and at what time. But yes, it can definitely give a lift, and there will be passive buying. So 100% agree. The short interest is always an interesting one. I think, deals like these will take time. The short interest might unwind itself by the time we know more and there's, approvals, etc. It might be a long time. So short interest is typically a bit of a shorter duration play. However, very, very valid, if anything happens suddenly. But then at the last point, I fully agree. I think I think you said a reasonable company. I think it's a great company still. The capex is still low. The supply and demand mismatches that he referred to as well is still there. From the post-COVID, COVID and post-COVID era, what we've seen. High dividend yield, good company. It's in our portfolio locally, and I think any pullback agreed would not be a bad play in terms of going long. Then in terms of the China ETF, absolutely, I like the China story. But he's right. He starts with the words. It's a health warning. Absolutely, you have to understand that there are risks involved in the Chinese play. at large. But I mean, GDP growth and equity market performance all over the world is kind of tied to the hip, so they all go up, together. In China, we haven't seen it. GDP have grown, but the equity market performance have been really, really bad. We're sitting at or close to all-time lows. PEs are 50-60% cheaper, so absolutely I think there's a play there. Whether you want to be as focused as tech, I'm not sure, but definitely agree on tech that can be, just understand the volatility, but even a wider China play for a small percentage of your assets is probably not a bad thing.
Sorry for that, Jaco. Excuse me. Jaco, with that said, we don't have much time left. In about 30 seconds, your stock pick, please.
Okay, 30 seconds. Okay, let me give it a go. Equinix is call it a real estate investment trust for data center specific. So it's more of a passive, more a safe play, but you're still looking at this tech boom and everything, because what do tech need? Data centers and everything it supplies underlying. So we've been looking at them for a while. It's probably been 5 years in our portfolios. It has had one or two up and downs lately, but they came out with a solid set of numbers and very much AI driven. And I don't think the demand and what we're seeing happening in AI will slow down anytime soon. And that's good for a downstream player like Equinix. So long Equinix play.
Well, Jaco, a pleasure having you this afternoon. Thank you so much for joining us. That was your midday markets update with Jaco Eager from Naspers.